Welcome back. You're watching Market Fatafat with me, Ankita Saxena, and with me is my co-anchor Shrishti Sharma. And now we are joined by Nirav Chheda from Nirmal Bang Securities. Welcome to you, Nirav. Nirav, the first stock on your radar is Tech Mahindra. Now, look at the moves that Tech Mahindra has given in the last 6 months, almost 16% returns. Do you see more upside to this counter, or what should an investor do at these current levels?
Yeah, hi guys, thanks for having me again. Tech Mahindra at this point has witnessed a consolidation breakout, and this breakout had a long time coming. So this breakout has come in at 1160 levels. It's a trend line breakout of a consolidation. So very likely you will see a good movement in this stock. It can move up towards that 1250, 1300 odd levels. So that should be a target at this point of time. 1150 should be a stop loss for long terms.
Okay, so that's the take coming in on a breakout candidate, that is Tech Mahindra. But Harsh, coming to you, because the pressure that we are seeing, especially on the Bank Nifty index, is coming from the HDFC twins, and HDFC Bank being down about 2.5%. Tell us how are the operational updates and where was the disappointment?
3% lower, Srishti. So comes as a bit of a dampener on broader market on the Nifty as well as the benchmark indices, other benchmark indices. But let's first talk about the numbers itself. If you're looking at advances growth at a standalone level of 16% on a year-on-year basis, just 1% uptake on a sequential basis, that's probably where the disappointment has come through. Even a deposit growth though was surprisingly strong, 19% growth on the deposit side, 2% up on a sequential basis. Deposits both on the retail as well as the corporate front grew 2.5% on a sequential basis. So very solid number there. But what we've also got to know is that at a merged entity level, the numbers look slightly on the lower side. So you're looking at, on a consolidated level, you're looking at growth of just 13% on the advances side, and you're looking at deposit growth of 16%, which looks fairly reasonable. But basically it's the advances growth which have come in slightly below expectations, probably at the cusp of a merger. That's probably the other piece which is moving. So a couple of reasons why probably there is pressure on the stock. But when the larger industry is growing at 15.5%, 13% number is probably where the dampener is coming at.
All right, then Harsh, we'll move on. The next stock in focus is Cummins. Now, it is on the back of a note that Kotak came out with today. Now, the Kotak has downgraded the stock to add from buy, and they have hiked the target price from 2,020 rupees from 1,860 rupees. And this downgrade has come in, after, the strong rally that we saw in the last 1 year. But, they say that Cummins still remains a very strong strong play in the growing end markets. They also feel that, the recent modification in the CPCB4 compliance timeline is very unlikely to affect their positive stance. And on the back of that, Cummins India is going to be in focus today.
Okay, moving on, and let's shift focus to Thirumalai Chemicals from the chemical space. Nirav, you have picked this one. We don't discuss this stock much often, but what's interesting is what you're spotting on Thirumalai Chemicals and the next targets to look out for.
Yeah, so you're right in saying, we don't really discuss this stock that often. The reason being, in the last 2 years, this stock has not done anything. In fact, a double top formation around 2021 led it to come lower. But we have seen very good consolidation, a 2-year consolidation from that time. And now the stock is ready to move up, and a very important breakout has been got above that 200 odd levels. Very likely this stock will now go higher towards the 245 to 50 odd levels. So this is where you look to buy this stock with a stop loss of around 198 for that target of around 250.
Okay, moving on, and from the IT space that is seen to be buzzing, we wish to highlight Infosys, and that's on on the back of a Macquarie note, where though they maintain their neutral stance on the stock for a target price of 1310 rupees, that is below the current market price of Infosys. But what they highlight, why not a sell earlier and or now? Now they have come up with a rationale that Think Indian IT Services is poised for a period of structural double-digit growth beyond the near term, air pocket in demand, and they see upside to the consensus growth estimates in FY25 and FY26, not only for Infosys but also for its peers. So maybe they are not looking at the short-term picture, but in the long term they do believe that there's a structural growth story that is expected to play out for all the IT counters, including Infosys, and that's why we are highlighting this counter for you today.
Right, Shrishti. And the next stock that is in focus today is Delivery. Now, Delivery is in focus on the back of a note that has come out from Kotak. Now, Kotak has downgraded the stock to reduce from buy, and they have cut the target price to 390 rupees per share from 410 rupees. Now, the downgrade has come in really, post the price rally, and also the fact that e-cart has into the express B2B business. That is the latest, instance of competition, and that can heat up this competition in the B2B space. Also, they feel that the endeavors from new competitors are best seen as experiments for now, but for medium-term ramifications, they will need time to ascertain. And on the back of this note, Delivery will be in focus today.
Okay, but a lot of action is what we are seeing in the oil and gas space, and from that space, Nirav, you have picked up mrpl. Tell us how the chart's looking like for this one.
Yeah, see, a beautiful pattern, beautiful chart for this particular stock. I have been recommending this stock in this show from quite some time, and it has only been moving up. Even today it is up about 12% and I believe this stock is likely to move up further. So even at this level you can go ahead and buy this stock. I believe it can move up towards the 120 odd level. This is a rounding kind of formation, and formation breakout has been got around the 80 level. So 100% retracement along the way up to 120 is very likely. So you will see 120 coming in. Look to buy this stock from a medium term perspective. Even on dips, your stop loss would be now at 80.
Okay, moving on then. Ashesha, coming to you for next one. The next counter is GCPL. Tell us, what are you spotting in this particular counter and what's the news flow over here?
Yes, Q1 operational updates is what the stock is reacting to. It reported its first quarter operational updates just a while ago. And as far as volume growth is concerned, on a consolidated basis, company expects to deliver high single-digit volume growth. In value terms, it is expecting double-digit sales growth, that is in INR terms. As far as EBITDA margins are concerned, they are expected to expand this quarter, and that is on account of solid gross margin expansion that is expected to flow through in the first quarter. Apart from this, we also have an initiating coverage note that came in this morning. In fact, MK came out with a report where they have initiated coverage with a buy rating, and they've given a target price of 1225 rupees per share. So on the back of operational updates as well as this initiating note that has come in from NK, the stock is gaining in trade today.
All right, then moving on, Harsh. Another bank in focus today, IndusInd Bank. Tell us what is keeping the stock buzz in trade today.
Well, Q1 updates, Ankita. I don't think there's much to guess about that one. So we'll go ahead. Advances, growing really well for IndusInd Bank. I must say, 21% uptick in advances on a year-on-year basis, 4% uptick even sequentially. And deposits maybe not following an identical trajectory, but up nonetheless, a solid 15% higher on the deposits count as well, 3% higher sequentially. So clearly IndusInd Bank showing some amount of resilience there. CASA also up around 6% or thereabouts on a year-on-year basis, 2+% sequentially. So across the board, it seems like quite a good report card. Of course, IndusInd Bank is committed, or rather at least the management commentary guidance is that advance or deposit growth will be pretty much in line with advances, which will help IndusInd grow in the 18 to 22%, 23% band. So we'll hope that that deposit catch up happens, but I'm guessing that at the moment the market seems quite happy about the numbers up 2+%.
Yes, the market seems to be happy for IndusInd Bank, but another counter from the ONC space. And Nirav, you have your eyes on HPCL. Tell us what are the next targets you're looking out for this fund.
So, post a breakout of 250, this stock is consistently moving up. A higher bottom formation has been got. Before that, there was a consolidation breakout that had come in. So, I believe this stock will again move towards its 52-week highs, or the previous highs, which was around the 350 levels. I believe that levels will come in due course, and the intensity of the move on the upside has increased, so it is very likely this stock will now move up quite aggressively. Look to buy the stock at current levels. 275 should be your stop loss for longs, and about 340, 350 is the target.
340 and 350 is the next target and stop for HPCL. But moving on, and from the pharma space, we are shifting focus to Venus Remedies now on the back of a news flow where Venus Remedies, its oncology wing is on the expansion spree, and they have received the marketing approval for oncology drug, where they've received the marketing approval for chemotherapy drug in some of the key geographies in the GCC region, and that includes Malaysia, Bosnia, Trinidad and Tobago, and these are the regions where they're going to be launching this oncology drug for chemotherapy, and that's why you are seeing the stock up anywhere between 2.5%. But the volumes are very less in Venus Remedies, but nevertheless the stock has a positive news flow, and that's why you're seeing the reaction.
Right, Shrishti. And the other stock in focus today is Lemon Tree Hotels, because the hotel has announced its latest signing, that is Key Select by Lemon Tree Hotels, which is in Udaipur. Now, the property is expected to be operational by Q4 FY24. Now, that shall be managed by Carnation Hotels Private Limited, which is a wholly owned subsidiary and the management arm of Lemon Tree Hotels Limited. Now, 2 days back, Lemon Tree had also launched its latest franchise property, Lemon Tree Hotels in Manali, Himachal Pradesh. And on the back of that, the stock is going to be in news today.
Okay, let's shift focus to the infrastructure space now. Nirav, Bitcoin is on the roll, because yesterday as well, despite the news, we didn't spot any news flow as such, but the stock was up around 10%, and today, look at the move itself. In the last 6 months, the stock is up 19%. So with today's move, do you see any breakouts over there?
Yeah, definitely. So there is a reversal which is in place, from 2018 of the high of 1200. This stock has come down even below the 200 levels, and then this reversal has taken effect. Very likely now this stock is going to move up quite aggressively. Why? Because you've seen a lot of buying at the lower end. Also, the trend has changed to positive after this reversal. A very important breakout of the 240 levels has been got. So this stock is now headed higher. I believe the aggression with which it will move up will be very high. So move up towards the 300, 320 odd levels in the near term, and probably 400 in the short term. So look to buy the stock at current levels. Your first target would be around 300, 320. So for that target for the near term, you can buy it with a stop loss of around 245.
Right, moving on then, Shesha, SOM Distilleries is also in focus, and what an up move the stock has given 165+% returns in the last 6 months. Tell us, why is this counter buzzing in trade as of today?
Yes, SOM Distilleries has been a solid wealth creator. On a year-to-date basis, it is up 155%. In fact, in the last 1 month alone, it is up nearly 20%. Today, of course, it is in focus on the back of company's fundraising plans. Yesterday, the company informed the exchanges that they will be considering fundraising in the board meet that is scheduled to happen on the 8th of July. So, on the back of these fundraising plans that the company has, the stock is in focus today. As we speak, up nearly 4%.
Okay, moving on, and Nirav, coming to you for the next one. You have picked up Coal India. Tell us how the chart's looking like for Coal India.
So this is one stock which has been in consolidation for a very long time. But looking at the options data, it looks like this stock will now start to move up. A good reversal from 220 odd levels has been got already, but the breakout is a very long way away. I believe one can look to play for the near term for that target of around 260. Look to buy the stock at current levels. 220 should be a stop loss, and around 260, 265 should be a target.
Right, moving on then, Harsh, Poonawalla FinCorp is also going to be in focus in today's trading session. Tell our viewers what is the news surrounding this stock and why is the stock a buzz today?
Well, yes, absolutely. Justifiably a buzz. We've seen very solid growth numbers coming through for Poonawalla FinCorp. We've seen AUM grow 41% on a year-on-year basis. Yes, you heard that right, 41%. It's at 17,770 crore. Now that AUM number, 10% sequential uptick with regard to that AUM number for Poonawalla FinCorp. Really solid growth numbers. Even when I'm looking at disbursements, highest ever disbursement, 7,050 crore, up 140 plus % on a year-on-year basis, 11% uptick sequentially, which was in Q4 it was the highest disbursement at that point of time. Or rather till that point of time. So beating that all-time high disbursement, now coming in at 7,050 crore, and you have GNPAs and NNPAs which are expected to improve further is what the company has suggested, and they continue to have ample liquidity even post all of these disbursements they've made of 7,000 crore plus. They're suggesting that there's 4,000 crore of liquidity still available with the NBFC. On the back of all of that, of course, stock is up and away 3% higher.
Okay, moving on, and let's focus to IEX now, because today it must have definitely the investors must be really happy with the move of IEX, because today the stock is up 1.5%, and that's in the back of the PAR market update that the company has come up with, where IEX has achieved 8,946 million units of overall volume in the month of June, and that's an increase of 8% on a YOY basis and a jump of 8% on a month-on-month basis. And Q1 FY24 volumes overall were seen to be jumping by 8% over Q1 of FY23, and Q1 FY24 market clearing prices were seen to be a little lower at 5.17 units. That's a downtick of 33% on a YOY basis. But with this, the company records its highest ever monthly volume at 2,675 million units, and that's an increase of 21% on the YOY side. But onto the supply and the demand side, the company says the supply side scenario during the quarter that was seen to be a bit easing out, and there has been some increase in the liquidity on the exchanges that led to the sharp correction in the price. While you are seeing the prices falling, they have highlighted that point as well. So on the back of this news flow, IEX is in focus.
Right, and moving on then, Nirav, Piramal Enterprises is also in focus today. Now, this stock has already given a return of 20% in the last 1 month. So, at the current levels, what is your chart saying?
See, I believe you're right. A good 20% has been got, but this has been an underperformer for quite some time. In fact, its peers have been going up, but this one stock hasn't really moved up that much. From 1500, this stock came down even below the 700 levels, and from there, some reversal has come in. But I believe the potential is huge. It can again witness 100% retracement up to the 1500 odd level. So the retracement wise, 50% retracement of the whole move from 1500 to about 700 comes to around 1100 odd. So I believe we can reach this stock can reach around the 1100 odd levels. Look to buy the stock here. There's a breakout on the daily, weekly and monthly charts as well with volumes. So buy at current levels. On the lower end, the stop loss would be around 915, and the possible target would be 1100 for short term and about 1500 from medium term.
Right, moving on, then the other stock in focus is Paytm. Paytm is in focus on the back of its Q1 updates that came in today. Now, according to the Q1 updates. Now, Paytm sees continued growth in payments and loan distribution business. They also continue their expansion of their consumer base with average monthly transacting users at 9.2 crores for the quarter. Now, their leadership in the payment monetization also continues as the subscription payment for the devices like Soundbox and POS machines continues to see increased acceptance by merchants. Now, merchant payment volumes for the quarter also stood at 4.05 lakh crores, which is up 37% on a year-on-year basis. Now, continued scale in the loan distribution business, they saw disbursements at 14,800 crores, which was up 167% on a year-on-year basis, and loan distribution in the quarter was at 1.28 crores. And that was also, up on a year-on-year up 2% trade today.
Okay, so that was why Paytm is buzzing today. But from the financial space, Nirav, you have eyes on Moto Finance. This particular counter has also seen some resilience in the recent past. In the past 6 months, the stock is already up 17 to 18%. Tell us what are the next stocks for this one.
Yeah, so again, very importantly, even in the finance space along with PEL, Moto Finance has underperformed, and finally a breakout has come in above that 1200 odd levels for this stock. Post that, you are seeing a good run up in this stock. I believe this stock can move up towards the 1400 1450 levels. So for that target, look to buy the stock at current levels. 1200 will be your stop loss. A lot of call action has been going on, so we are seeing resistance shifting upwards, and the support from the 1200 odd levels, you are seeing good action at 1240 1260 odd strikes. So we are most likely going to see a good rally in this stock.
Right, moving on to Ashesha. Then Ashesha, LTI, Mindtree and JSPL are also on your radar today. Tell us, why are these stocks in news today?
Yes, LTI Mindtree will replace HDFC in the Nifty 50 index with effect from 13th of July. This is on account of merger between HDFC and HDFC Bank, and HDFC shares will get delisted from the index with effect from 13th of July, and that is the reason LTI Mindtree is getting included. In fact, Nuvama came out with a report some time ago where they said that they expect 120 to 130 million US dollars of inflow on account of this inclusion that is taking place of LTI Mindtree. LTI Mindtree, remember, is the 5th largest IT company by way of market capitalization, and it replaced TechM as the 5th largest IT company after the merger was announced between LTI and Mindtree. Apart from this, JSPL was also in focus, and that is because it included in the Nifty 100 index with effect from 13th of July. So on account of these two inclusions that are taking place, both of these counters are in focus today.
Moving on to the next counter then, from the financial space, Nirav, there seems to be no stopping for all these public sector banks. From the pack, you have picked up Union Bank. Tell us, what are the next targets for this one?
So, looking at the overall picture here, there was a huge long snooze for this particular stock from start of this year, probably the end of last year. So yeah, post which if you look at the longer term charts, a flag kind of a formation was taking shape, and that breakout has come in. And that breakout has come in around the 75 odd levels today. I believe this stock can move up higher. It can come up towards its 52-week high, which are around the 90-95 odd levels. So look to buy this at current levels with a stop loss of around 70, and 95 would be your target.
Right, and moving on then, Harsh, AUSFB is on your radar. Tell us, what are you reading for this stock? Why is the stock in focus today?
Well, yes, on the back of, again, solid numbers coming through from AU Small Finance, what we can see, the year-on-year number with regard to deposits is 27%, but it's absolutely flat when I'm looking at it sequentially. So that may be a bit of a dampener there on the counter. And where advances is concerned, well, very strong growth with regard to advances, 29% uptick on a year-on-year basis, 8% uptick sequentially as well. So that machine or engine with regard to advances continues to grow well for AU Small. What we're also seeing on the CASA side is the CASA deposits have actually degrown 9% on a sequential basis. So that's something that one would need to focus on. I'm guessing the rate hikes undertaken by all banks with regard to mobilizing deposits is also impacting AU small. And what we're also saying is that CASA growth came in at 14% on a year-on-year basis. So while 14% year-on-year, but it's a 9% downtick on a sequential basis where CASA is concerned. So keep your eye out on AU small because that's in focus on the back of numbers.
All right, then that was the roundup of all the stocks that are buzzing in trade today. Shrishti and I will take your leave for this edition of Market Fatafat. Thank you so much for tuning in.